If you invested $10,000 in Amazon stock 10 years ago, you would have $57,300 today, nearly 6 times your money. That's a pretty incredible return in just 10 years. So, how did Amazon stock get here? I'm going to answer that question in this video. And also, as a bonus, I'm going to let you know if you invest in Amazon stock today, can you expect something similar over the next 10 years, right? If you missed out on Amazon stock for the last decade, what if you invested today? So let's get right into this video. Here's a chart I have pulled up of Amazon stock's total return over the last decade, going back all the way to March 8th, 2013. You see, the stock has risen very nicely over the years, and it really exploded in 2020 as, of course, we were staying at home and non essential brick and mortar retail stores were closed, and we wanted to shop online, and Amazon fulfilled those needs, and the stock exploded as a result. But as economies have reopened, Amazon has given up nearly all of the gains from the pandemic boost, right? You look at that, they've almost made a round trip from 2020, going all the way up and then coming all the way back down. So all the gains, all the benefits from the pandemic are almost gone for Amazon, and that's really interesting. But let's see here over the years how Amazon has done this. Look at Amazon's revenue trailing 12 months. It went from less than, let's say, 100 billion in revenue in 2013, and that has just been steadily rising all the way up to $514 billion in revenue in the trailing 12 months. I think Amazon is only behind Walmart in terms of total annual revenue, and that has a lot of benefits, right? When you're at that kind of scale, now you can leverage a lot of your fixed costs around much more sales, and you can gain negotiating power with suppliers, with workers, with landlords, with many financial services you could think of. So it gives you a lot of negotiating power where you can bring down costs. And Amazon has flexed that power. Amazon has flexed its negotiating power. If you recall a few, maybe it was more than 10 years ago, but Amazon had a big battle with UPS, right? The shipping service. They used their negotiating power and their large scale shipping needs and said to UPS, "Hey, you got to give us better terms." And UPS was trying to say, "No, we're not going to do that." And Amazon said, "Fine, we're not going to direct any of our business to UPS." And after a while, UPS gave in and gave Amazon better terms because they're so large and they needed them as a partner. They couldn't afford to lose Amazon as a partner. And so Amazon has been negotiating this negotiating power from scale, and I suspect it will continue doing so because now it's at just an absolute massive size, 514 billion in trailing 12-month revenue. Another thing Amazon has done well is to increase their earnings per share over time as their revenue has grown. Amazon gets a lot of flack and has gotten a lot of flack for their limited profitability. And as you see here, its profitability has crashed in the aftermath of the economic reopening. And now we can kind of get an idea of why Amazon's stock price, if we go back to this one, I mentioned that Amazon's stock price has came down after economic reopening started in 2022, and it almost coincides directly with the fall in its earnings per share. So if you're new to investing, this is an interesting point to um, digest in that the company's stock prices are usually very closely related to a company's growth in earnings per share. Earnings per share leads growth in earnings per share usually leads to growth in the stock price, right? Because that's what you're getting when you're buying a stock. You're buying a piece of a business. You're buying a small fraction of a business. Well, depending on how much money you invest, you might be buying a larger piece. But if you're spending $10,000 to buy Amazon stock, you're buying a small fraction of that business. And that means you're entitled to the profits of that business, right? You're entitled to those profits. Those profits belong to you, right? Now, management has control over what they do with the company and what they do with those profits, whether they choose to give those profits to you as dividends right now, or whether they choose to reinvest those profits into the business to continue growing the business, and then sometime down the road to give you dividends sometime later, right? So eventually, if a company continues generating profits and earnings per share, they will return that capital, that profit to shareholders through either dividends or share buybacks. And so in that way, you will eventually get in your pocket, in your bank account, in your brokerage account, the benefit of the growth in these earnings per share. And that's what makes the stock price go up or down. The strongest factor that makes stock prices go up or down are the earnings prospects of these companies. Okay, I know some of you may look at stock prices and look at them going up and down and not quite understand why they're moving up or down. Or maybe you look at a stock price come down and you think to yourself, oh, now this stock is a bargain because it used to be 20% higher a week ago and now it's 20% lower today. That means I'm getting a 20% discount, and so the stock is cheaper. Wait a second now. That's not entirely true. Let me give you an example. Let's say you go to a supermarket and you look at a 20-ounce box of Fruit Loops and it's selling at $5. The 20-ounce box of Fruit Loops this week selling at $5, okay? Let's say you come back next week and you see a 12-ounce box of Fruit Loops selling at $4.50. Now the price went down by 50 cents, right? But are you getting a bargain? Because now instead of getting 20 ounces of cereal, you're only getting 12 ounces of cereal and only 50 cents off the price, 10% off the price. So there's like a 40% reduction in the contents, but then only 10% reduction in the price. That's what happens a lot with stock prices, right? The stock price might come down by 10%, but if you look under the hood, the earnings per share may have come down by even more than that. So yes, the stock price might be lower, but it's not like you're getting a bargain because the contents, right, the earnings that you're getting have dramatically decreased. And that's what's happening with Amazon stock. Look here. Earnings per share for the trailing 12 months were over $2.40 in 2022. Now they're negative 26 cents, and they've been falling all year, negative 26 cents. And management is saying it's going to be difficult to bring these costs down and return our company to profitability. And so, yeah, you look back at the stock price is down, let's say it's down by almost 50% from its highs. But at the same time, look at this. Earnings are down way more than 50%, right? Earnings have come down from over $2.40 to negative 26 cents. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So, I've been saying that Amazon's stock price decline has been justified by the fall in profitability, by the fall in earnings. It's by no means a bargain. It's not like Amazon stock is a bargain today because it's down so much off its highs. Okay? That's I just wanted to make that point clear because I get this question a lot, and I teach finance at university, and my students ask me this question a lot. Like, hey, Amazon stock price is down. Does that mean it's cheap? Does that mean it's a bargain? And I give them this example. I give them the same example that I just gave all of you so that you understand that you're getting less for your money. So just because the price is lower, it doesn't mean you're getting a bargain because what you're getting has also been lowered. What you're getting, what you're paying for has also been decreased, right? So there's two sides of the equation. There's the market price, and then there's what you're getting for the price that you're paying. And I see too often that investors neglect what they're getting and they solely focus on the market price while forgetting to look at what they're getting for that market price. So I wanted to go through the pains and elaborate on this point just because it's so important, it's so vital for investor success to understand that you're getting what you're paying for the market price is a piece of ownership of a business, and as part of the ownership of a business, you're getting entitled to earnings and profits and cash flow and assets. And if there's less of those good things that you're paying for, then yeah, you would be less willing to pay a higher price because you're getting less in return. So finally, let's look at Amazon's valuation, the forward price to earnings ratio. And I'm going to look at this, and I want to see at this valuation, at this price, is there room for today's investors? If you bought Amazon stock today, can you make the kind of gains over the next decade like investors in Amazon stock did 10 years ago? And looking at Amazon's forward price to earnings ratio of 36, it's not prohibitively expensive right now. It's not prohibitively expensive right now. So if you were to buy Amazon stock today and hold it for 10 years, I'm pretty confident that you would have your wealth will increase over that time. I'm pretty confident in that. So you put $10,000 in Amazon stock today, 10 years later, you'll probably have more money. You'll probably have more money. How much more money? Now that's the difficult thing to say. Is it going to be $1,000 more, $5,000 more, $10,000 more, $100,000 more? That's a lot harder to say. But the the one that's less difficult is to say, okay, I can put money into this stock, and if I plan on holding it for 10 years, I'll probably have more money. Okay, so that's a good starting point to begin with as an investor, to find companies like that, like Amazon, where you could put money in and hold it for the long term and expect to have more money at the end of those 10 years because the business will perform in those 10 years that will justify a higher valuation for the business, right? Amazon will work through its profitability problems, it'll work through its growth ambitions, and it'll likely right size the business after overinvesting during the pandemic. I'm confident the company will get things right, and over 10 years, it will deliver positive gains to investors. Now I can't tell you how much those gains will be. Will it be 5% per year, 10% per year, 20% per year? That's a topic for another video. But for this video, I'll just tell you that if you invest in Amazon stock today, hold it for 10 years, you'll probably have more money at the end of that time. All right, so that's the end of this video. I thank you so much for sticking with me and watching this video all the way till here. And if you've stuck around this long, you probably like this video. And I've got a few more videos that I think you will enjoy. So please click on one of those and I'll see you over there.